Replacement cost versus actual cash value. What homeowners need to know about their home insurance coverage. Watch this video to understand the claims payment process in home insurance. If you own a home, you can use information in this video to figure out where you currently stand in terms of home insurance coverage and find out how much you would potentially get paid when you have a claim. Keep in mind the limits appearing on your DEC page, the DEC page of your insurance policy, are not how much money you will actually receive, but the maximum you could potentially be paid. Find out more about replacement cost versus actual cash value. Welcome back, folks, to another edition of Sweetie Kiwi. How you doing today? I hope you are doing fantastic. I'm doing marvelous if you were to ask me. And today I want to talk to you about replacement cost versus ACV, actual cash value. What you as a homeowner needs to know about your home insurance coverage. Number one, how much you will receive for your claim. How much you can expect to be paid for your insurance claim depends on three important factors. Only three. One, how accurately can you describe, document, and show the lost value of your property? Keeping a home inventory of items can really help with this. If you're having conversations and discussions with the insurance company, they want to see some proof. They want to see some facts. So the more details and proof you provide, the less likely you are to be at the mercy of the insurance company's estimates. That's the first element. How accurately can you describe, document, and show the lost value of your property? Second question, what type of policy do you have? Different insurance policies provide different types of coverage. You might have a homeowner's policy or a condo policy, but the type of homeowner or condo policy you've taken out will actually dictate the set of risks covered. And a lot of homeowners don't know this until, unfortunately, an adverse event happens. So this is something you need to think about beforehand. It will also, the policy that is, will also indicate exclusions and special limits for certain items. So special limits are not standard across all insurance companies. It really varies from insurer to insurer. So those specializing in attracting consumers with high value homes might have higher special limits in the areas of jewelry, for instance, wine collections, and fine arts. The third question that you need to ask yourself, and this will dictate how much you will receive for your claim, is the basis of claims settlements. What is the basis of claims settlements? Will the insurer pay actual cash value or replacement cost? And this is an important distinction. You can usually find the basis of claims settlement in the small print of your policy. Unfortunately, a lot of policy holders, including myself, don't read those fine prints until stuff happens. So now is the time to read the fine prints. So you can find the basis of claim settlement in the small print of your policy. Very often, homeowners are disappointed by how much they are paid because they did not understand the meaning of insurance claim terms. So now is the time again, folks, to get some education around important factors, important criteria listed on your home insurance plan, so that when stuff happens, you are already familiar with what you have gotten yourself into, quote unquote. Let's talk now about actual cash value. Let's define that. When people talk about ACV, the actual cash value, what is it? Actual cash value is the depreciated value of an item of property at the time of the loss. What is the depreciated value of an item? Let's say you bought a car. You bought a car for $10,000. No, let's just say you bought a car for $20,000 5 years ago. And every year the car's value has depreciated, so it has lost value. So after the fifth year, the car is no longer worth, say, 20 grand, but it's worth 10,000. So if something happens to the car, the insurance policy will reimburse you up to 10,000 because that's the actual cash value. This type of settlement, though, does not allow you to replace what you've lost. Rather, it compensates you for the value of the item, in this case, the car, as if it was being sold at a garage sale. Actual cash value leaves you in a tough position because you will not be able to go out and buy a similar item new. At least not without some of the money to replace it coming out of your own pocket. So replacing your personal content or even worse, your home on an actual cash value or depreciated basis leaves you at a loss compared to replacement cost settlements. It's something that you have to think about before getting the policy. So I'm just explaining to you, when you want to go and get an actual cash value policy versus a replacement cost policy, you need to know the pros and cons of the ACV option. Let's talk now about replacement cost. I've explained to you what actual cash value stands for. Let's now talk about replacement cost. Replacement cost provides you with a payment equal to that which will be required to replace the lost items. Let's say, for instance, talking about the car that I was just, your car that I was just referring to. Let's say you bought a car and something happened to the car, and replacement cost will pay you more than $10,000. Even if the car is worth $10,000 today, the replacement cost policy will pay you more. I wouldn't say if it's because I wouldn't say it would be 20 grand, because it depends upon other clauses in the insurance contract, but it will be more than 10 grand. It will be more than the actual cash value policy would pay you. The replacement cost is superior to actual cash value because it allows you to put yourself in the same position you were in prior to the loss. It provides you with the necessary cash to replace your items. In terms of whether you should, the thing is, folks, first of all, we're not giving any insurance advice here. We're not insurance experts. So we would say that you want to evaluate your own financial situation, the risks that you want to cover, and you want to have a discussion with an insurance agent to go through your situation before choosing either option. We're just giving you general information about the choices available out there so that you can make the right decision at the right time. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of Sweetie Kiwi. We are still having a conversation here around RC versus ACV, replacement cost versus actual cash value. If you love the clarity and quality of the content so far, please consider subscribing to our channel and turn on the notification bell so we can send you great information as we do every single day, rain or shine. Like this content, share, and comment if you have questions. We will answer. We answer all questions as long as the question is pertinent, is relevant to the topic being discussed. Let's talk now about payment process for replacement cost. This is important to know. What is the payment process? We've seen it in the public. General public has a common misconception about replacement cost, and this has to do with how it will be paid. You must actually replace the items first before you're able to collect a full settlement. Let me repeat that. You must actually replace the items first before you're able to collect a full settlement. The insurance company will not give you the money because they are thinking that you might not use the money for the replacement. You might use the money for something else. So they want first to make sure that you spend your own money to replace the item and have a receipt and have a proof of payment, and then send that documentation to the insurance company to process the payment and reimburse you. You might have exceptions for this policy. This is a general guideline across the industry, at least in the United States and Canada, but you might have exceptions. For example, in many high value home policies, the terms may be different. Depending on the size of the loss and the type of claim that you have, you'll likely be asked to provide a list of things, which is why, folks, it's always important when you have a house to have an inventory of items in the house, at least an approximative list of inventory, so that if stuff happens, you're able to go back to that list. And ideally, you want to have the list in electronic form. You want to have it in an email, or you want to save it somewhere, not on the computer inside the house. God forbid something happens, there's fire and the house burns down. You want to be able to have access to that list. Expect to allow time for the insurance company to review the list and determine how and what they're going to pay you. Insurance agents, insurance companies have adjusters inside and appraisers inside the very specific departments, and their job is just to review those kind of claims. You should then have an opportunity to review the company's offer. So if your basis of loss settlements was actual cash value, you might be asked to sign off on the amount, agreeing that it's a final payment before you receive a check. All right, so that's the process. So the process is very simple. So first, you send them a list. First, you send them a list of things that you believe you have lost. They review it. They look around and see if they basically find out an amount that works for them, and then they send you an offer. And after they send you the offer, you review it, and if you're comfortable with the offer, they want you to sign a statement, and once you sign that, they send you the money. And when it comes to a replacement cost, this is basically where they want you to first pay for the amount, and then they will reimburse you. So you have two specific processes for either replacement cost. You have a specific process for a replacement cost and for the ACV, the actual cash value. Now let's talk about before you get paid, before your claims moves ahead in the insurance company's internal control system. There is required information. You got to give them something specific so that the reviewers, the examiners within the company are comfortable that this is not a fraudulent claim. So when you are expecting full compensation for the replacement of items or personal content that were insured in your home, you want to provide a list of specific things. Let's go through them. The item descriptions, which makes and models if applicable. So you want to describe the items, and again, the model and the make if possible. When you originally purchased each item, the price you paid for each, the item's replacement value today, any photos showing the condition of the items. If you have video, if you have footage, that's even better. The original receipts, if possible. This is kind of an exhaustive list. The idea here is that you want to provide as much info to the insurance company as possible so they can process your claims, your claims. So let me just quickly go through it again. So the item descriptions with the makes and models, if applicable, when you bought them, the date of purchase, the price you paid for them, the item's replacement value today, any photos showing the conditions of the item, and the original receipt. This is kind of important, which is why we always advise people to keep their receipts. We always advise people to find a way to document everything they have in the house, especially high value items. Now, once you have all the information ready, let's talk about the two-step process of replacement cost claim. You can expect to receive 2 checks before being fully compensated when your loss settlement is on a replacement cost basis. The first check will be for the actual cash value of the items. Then you must prove that you have replaced the items. Only then will you typically receive the final payment, so the extra. So earlier I was talking to you about you have to spend the money first. If you are in a replacement cost policy, you have to spend the money first and then receive the check later on. There are some exceptions. There are some variations across the country where some insurance companies they understand that people might be in financial straits after suffering a loss, so they might be short on cash. So they will give you a check for the actual cash value so that you have something, so you have something to live, and you have to add your own money to be able to repay to actually buy another item similar to the one you lost. And once you do that, you have to send them a check. You have to send them the receipts of the purchase, and the insurance company will give you the extra, the delta. They will send you the extra cash that you need. For example, let's say you have going back to our car, the example of our car. So you have the car was worth 20 grand when you bought it, and it was worth 10,000 when you lost it in a home fire, for example. And what the insurance company, and your insurance is on a replacement cost. So what you want to do, you want to spend 10 grand, go and buy a car. You want to buy you can actually spend 20,000 to go buy a car. And then what will happen is that you will get 10,000 from the insurance company in the first few days. And once you buy the car, you show them the receipts for the 20 grand, and they will send you the extra 10,000, the remaining 10,000. So you can usually submit your expenses along the way if you replaced items over time, and you can talk to your adjuster about when you can expect payments. So this depends greatly on the size of the loss. So you want to keep an open communication with the adjuster on your claim so that you can understand exactly what to expect, and this will help you get paid for your actual loss. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of Sweetie Kiwi. We're still having a conversation here around replacement cost versus actual cash value, what homeowners need to know about their home insurance coverage. Let's talk about cash out, loss settlements versus replacement cost. Some high-end policies might offer you the option to receive full replacement value without an obligation to replace. This type of policies, though, are generally more expensive than standard insurance policies. What you want to do, you want to talk to your insurance representatives first to go through your options and see if you qualify for one. Those policies are often based on higher home values or condo or tenant policies with higher content limits requirements, as well as other criteria. This is specifically different from replacement cost, where you might only be offered the depreciated ACV, the actual cash value, as a settlement option if you choose not to replace the item or to rebuild your home. So you want to really understand that. You want to understand the distinction between cash out loss settlements versus replacement cost. What about, let's say, have a conversation a little bit about an insurance company repairing items. The insurance company often retains the right to repair or replace the items. Usually, big insurance companies have a whole network of repairers, handyman and other professionals who are trained, whom they use often to do work. And for the insurance company, this is a cost strategy. This is a cost containment strategy. They're able to reduce expenses by having their own networks. So the adjuster will review your list and let you know. You might be offered to repair instead if an item can be reasonably restored to its condition prior to the claim, because the insurance company is not always there to buy something new. No, if they can repair it cost effectively, they will rather do that. Otherwise, the company will offer you a replacement cost. So this is the slight I would say the slight distinction you need to know when it comes to sending the insurance company a replacement cost claim versus an ACV. The bottom line I'm trying to get at here, folks, is that when you have a claim, the insurance company will work with you along the way. You have a goal. Your goal is to go back to your life prior to the incident, and you want to do this as quickly as possible. The insurance company, on the other end, wants to reduce the amount that they pay you. And the bottom line is, the more documentation you have, the more evidence you have, whether it is an inventory list, a list of an inventory of items lost, or the receipts, or anything that can prove the value of what was lost, that could accelerate things. Now, the insurance companies will also do everything they could do to reduce their payments, because for them, a claim is an expense. So if they can repair the stuff, they will do it rather than replacing it. Sometimes there have been cases of insurance companies even buying used items to replace the lost item, if they believe that the difference between the used item, the secondhand item, and the brand new item, the difference in terms of quality quality is too low. In other words, the brand new items is not that different from the secondhand item. They will just go ahead and buy you and get you the secondhand item, of course, with your agreement. Let's talk about when people mention replacement cost claim or ACV claims. Sometimes things don't go as smoothly as they are expected to. So you can have some tensions. Now, how do you negotiate out of that? Let's talk about the available negotiation options. There might be room for negotiation of replacement cost values. For example, the item might have been replaced by a better model since the time when you first purchased it. You might have had a 5-year-old laptop that cannot be replaced by the same make and model today. In this circumstance, you might find an equivalent product and list that as the replacement equivalent with the associated value. Now, always try to be honest. Try to do your best to find the most similar replacement item possible. If you give a fair replacement cost price and do your research properly, you are likely to get what you're asking for. The insurance companies are not there to play bad cop or bad friend. They are trying to work with you. If you don't do the extra work though, the adjuster will come up with his or her best solution or evaluation, and you might lose out, and you don't want that. Some insurance companies are more lenient than others. Depends on the location, depends on your the history of how long you've been clients with them. It depends on your particular policy. It depends on your claim history, how often you have sent them claims, and how good of a policy holder you have been, quote unquote good. And this depends on case by case circumstances and the company's own requirements. And those requirements are even more specific when we talk about irreplaceable or obsolete items. So irreplaceable or obsolete items. You might find yourself in a situation where you're only offered actual cash value if an item is determined to be obsolete, or by its inherent nature. If the nature of the item itself cannot be replaced, some items are irreplaceable. How do you replace a ring that grandma gave you 20 years ago before passing? It cannot be replaced. This is a unique item. A similar clause can apply to sets or pairs of items when only one part of a set or pair is lost and the other is undamaged. Specialty items that cannot be replaced, such as collectibles, I spoke about that, antiques and fine arts, should always be discussed with your insurance representative before a claim occurs. This will enable you to get the proper advice regarding how to protect the value with the right type of insurance. Maybe ACV or replacement cost insurance is not the right type of insurance you need for that kind of item. And talking to your insurance rep before everything happens also gives you an opportunity to get appraisals, and that's important. And possibly schedule the items on a separate floater or rider to ensure a settlement to value. So you want to do this because otherwise you might be very disappointed in what you receive if items of this nature are lost in a claim and the proper insurance was not obtained. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of Sweetie Kiwi. We're also having a conversation here about replacement cost versus actual cash value, what homeowners need to know about their home insurance coverage. Let's talk now about replacement cost. And replacement cost could include by law or ordinance coverage. And let's go into the nitty-gritty here. Beware of increased cost of reconstruction when it comes to ordinance or by law coverage. So your home, for instance, might be insured for replacement cost, but it can affect the actual cost of replacement, increasing it if bylaws came into play after your original home was built. Some policies include exclusions that don't cover the increased cost of construction due to bylaws or city ordinances. Endorsements are generally available to add bylaw coverage to your policy, but some more comprehensive high-end insurance policies will include bylaw coverage as a matter of course. And this could be a major problem, a major hindrance if the interpretation of what the actual cost of rebuilding will be if your policy does not include this coverage. So this is, again, going back to what I said earlier, this is a matter of conversation you should have with the insurance rep before a claim occurs. What about under insured building issues? And in some policies, you see that, especially in the fine print or near the end of the policy documents, you see something called a guaranteed replacement cost clause. The guaranteed replacement cost clause gives you some flexibility. It gives you some wiggle room around the total insured value of the home, when it's been determined that the cost was a little off. Mistakes happen, honest mistakes. If the value was incorrect at the beginning, it's fine as long as there is no I would say malice behind it. And this can depend on your specific policy wording and the type of policy you have. Let me give you an example. Some policies might state that you'll still be eligible for a replacement cost if you are insured to at least 85% of the value of the actual reconstruction cost. And this is something, again, that depends on the location. It depends on the insurance policy and the insurance company's requirements. It depends on your claims history. It depends on the type of property, the type of item or assets you are insuring at this particular time. It also depends on the market in that particular location. So the issue of underinsured buildings will not happen if you are in a hurricane zone versus if you are in quote unquote peaceful zone, a zone where there is no hurricanes, for example. Now, let's talk about the insurance instances where the insurance company will pay the full limit. Some insurance companies might pay out the full value to limit for the home and its content in disaster claim situations where a home and its contents are a total loss. And this might be the case after a major natural disaster. I was talking earlier about hurricane or a fire. But the situation must make sense to the adjuster. So insurance companies will leave this to the adjuster. This is something that is up to the discretion of the insurer. An insurance company always has a right to ask for a proof of loss. And the adjuster might come to a settlement without making you list every single item up to your policy limits in these types of major claims and total losses. So you always want to ask your insurance rep how your insurance company traditionally settles a total loss to get an idea of how things will work. This is the kind of conversation, again, you need to have beforehand before a claim occurs. Always be prepared with copies of larger purchases stored in a cloud or a safe deposit box off the premises. That's what I said earlier. You don't want to save your important information on the computer or on the laptop inside the house. It must be somewhere. You want to regularly document your home with photos. You want to take pictures and even better, videos. You want to have footage of the homes. And those could come in handy in a total loss situation. Thank you so much, folks, for today's conversation. I really appreciate you listening to us. And I want to quickly recap the conversation here. I was talking to you today about replacement cost versus actual value, actual cash value, what homeowners need to know about their home insurance coverage. And I spoke to you about how much you will receive for your claim, actual cash value defined, replacement cost defined. I also talked about the payment process for replacement cost, the required information, something called the two-step process or replacement cost claim, cash out loss settlements versus replacement cost, the insurance company repairing items when the insurance company chooses to repair items versus buying new ones, available negotiation options, irreplaceable or obsolete items, replacement cost that could include bylaw or ordinance coverage, underinsured building issues, and insurance company paying the full limit when they choose to do so. I will see you another time. But until then, remember, stay marvelous.